Good morning, everybody. Happy New Year. Welcome to 2026. The page has turned. We start a new chapter and everyone's back to work full time. Well, most people are going to be back to work full time. And we get to see what markets are in store for us this year. So I want to wish you all a very happy new year once again. Morning, K-Man. Happy New Year, mate.
Happy New Year, Ryan. Happy New Year, everybody. We pressed the start button, and so did some other people press the start button for 2026.
Yeah, absolutely. Lots going on to kick off the new year. Never a dull moment, as always. Before we get started, just want to make you aware we do have a New Year sale on for our trader funding program. I'll put the link and the code in there. You'll need that code New Year 2026 to get 30% off a trading funding program account. So if you want to kick off the new year by trading our money rather than yours, you can do so there. Click the link, check out the details and use that code. And good luck to anyone taking that this year or who have current TFP accounts. We hope this year's a good one for you. Right, let's get cracking. Not an awful lot on the headline front in terms of total headlines, but a few bits and pieces going on anyway. Let's get rid of that. Going to start with a bit of data out of China. We've had some PMI data coming in, both China and Japan there. China services Caixin PMI coming in at 52, as expected, down a small pip on that one. We also had the rate, well, it says the Caixin one there, but I think it's now the rating dog number. So they haven't updated that calendar yet. Japan, their manufacturing PMI for December coming in at 50 versus 49.7 expected. So a little bit of an improvement there. That was the final number for that. While in Japan, Bank of Japan's Ueda continuing to bang the hike drum, saying they will raise rates if the economic outlook is realised. He says Japan's economy showed resilience last year. He says that they're adjusting the degree of monetary support to help achieve sustained growth. Notice that tone there, degree of monetary support. They're not calling it tightening still, or they're not calling it taking the rates, a change in language. They are still accommodative, as they say. Expects the economy to sustain a cycle of moderately rising wages and prices. So as far as we're concerned, it looks like they're going to continue to hike as long as the data plays ball. How often they do that, though, is open to question. PM Takaichi says inflation is near the Bank of Japan's target and that 2026 is seen as a major turning point. Finance Minister Katayama says Japan is at a critical stage in its shift to a growth-driven economy from deflation, and says that the financial sector holds the key to economic growth. Kay, we need to be looking at when the next hike comes. Do you think it's going to be a quick follow-up, or are they going to give it a quarter or two?
I'm going to be very honest in that. It's anyone's guess. And if they get their 5+%, which was asked by the unions and already hinted by most of the bigger companies, they could actually do it. But I doubt they will do another one before the end of the fiscal year. So I'm going to say my first impression is that they won't go before May or April or May. Don't know exactly when those meetings are. But I think we're in for at least another one. They will take the yields to the rates to at least 1%, and I guess we do that over the course of this year. Now, the speed of it will, in my opinion, also not depend on only on what they see in those wages. Obviously, they will need to see a bit of positives in the economy, and that bit may appear perhaps only second half of this year when all of Takaichi's plans and stimulus has been put in place. If we see a market positive impact on the economy, I think then the Bank of Japan will have a clear green light to take those rates up to at least 1%. I mean, people are not talking about potentially going over 1%, but as with all things in Japan, and as we have seen already since Ueda arrived, it took them 2 years to get to 3/4%. So it's probably going to be taking a lot longer than what people expect to take it over 1%, if already they will go over 1%.
Yep, yep, I agree with that. Right, moving on to Switzerland, and a bit of a flip around in the PMIs. We got the manufacturing PMI coming out soft at 45.8 from a prior 49.7, was expected to rise 2 points. Those services flip the other way, jumping to 52.1 from 45.3. Over in the UK, mortgage data, this is November data. Mortgage approvals coming in slightly higher than expected. They're down on last month. Mortgage lending as well, a little bit softer. Consumer credit, though, that jumped to 2.1 billion from a prior 1.1 billion that was revised up to 1.7 billion. Credit card use jumped as well to 1 billion. It was up 400 million from last month, but last month got revised up 100 million. So the jump was 300 million. Nothing untoward too much in all that. November can be a bit of a funky time. We've got that retail stuff going on ahead of the holidays, spending, Black Friday, all that stuff could be, in essence, part of the reason why we got a big jump in credit there. We'll need to see how that plays out in December. Fed heads have been a bit quiet. We did have Fed's Paulson out over the weekend, saying that she sees room for rate cuts later in the year. So she sees inflation moderating and the labour market stabilising, with growth coming in around 2% this year. And if all of that happens, then some modest further adjustments to interest rates would be likely appropriate later in the year. So not standing on one side of the fence or the other. Right, obviously the big news that happened is this stuff in Venezuela. You're probably up to speed in everything that happened. It was an incursion, shall we say, by the US that didn't last too long. They picked up leader Maduro. He's in the clink at the moment. Trump has started to sort of get behind the interim leader. Well, I say get behind. He's basically threatened her to toe the line, or she'll get worse than what Maduro has. It's only seen a sort of modest reaction in markets at the moment. I think the speed of it happening and the fact that it was touted for so long has had market risk not taking too much notice of it. However, there is potential knock-on ramifications that may play out over the days and weeks ahead. Looking at Russia and China, who have big interests in Venezuela as well. So although the market isn't taking much notice at the moment, it won't take much before it does start to take notice. So this is an ongoing situation. Trump has also touted maybe doing similar in Colombia. He's also had a dig at Mexico, saying it has to get its act together. And apparently he offers to send Shine Bomb troops every time he speaks to her, and saying that the cartels are very strong in Mexico and Mexico has to do something. He's also back on the Greenland bandwagon as well. So again, if he decides to do something there, that will be a big hornet's nest to get into. So, okay, we've been talking about this morning. There hasn't been a lot of market reaction, as we said, but you know, we always look at where the risks lie, and there's still a few bumps in the future.
Yeah, I had a bit of an initial positive dollar reaction, maybe the usual correlation of kind of trying to go flight to quality, but I would be a bit cautious with that one. So the two the main things that we saw are obviously metals higher again, then silver rallied, gold is bid again, and I think those are the ones as well that we need to keep a close eye on, because that is going to tell us where the barometer for geopolitical risk lies in the days and weeks ahead. as we've been already saying in the room, and for those in the room, there's a good article in our newsroom as well by Tracy, and speaking about everything else that's going on there, apart from oil. The first market reaction was a bit on oil, but there's a lot more going on, in my opinion, over there, and especially those um, China, Russia, Iran interests, etc., that we are seeing in there, and there I think that the market is going to remain on its toes for what risk is concerned. So yes, those may be the ones that react the most. Initially, we had a bit of a dump in oil, but that is stabilizing right now. It's going to depend on how the other forces having an interest in Venezuela are reacting, right? And also depending on those, I think we then have to look at what the next move of the Trump administration will be. So yeah, it's all still up in the air, but I would be a bit cautious. Also, as we were saying this morning, FX risk hasn't really reacted too much. Yeah, we see yen a little bit stronger on the crosses, but really it's not something that is really market, because we had a little bit of a setback there in dollar yen, but you're talking about 40-50 pips. It's not something where everything is starting to reverse, but I'd still be a bit cautious on whatever risk is concerned. As we were showing, yeah, I mean, actually this one rallied. Um, why? I don't know. Maybe maybe still some early days money coming back into the market, but it's starting to give up the gates now again. Yeah, I wouldn't be surprised if we see a delayed reaction on risk in FX market as well, if the geopolitics are showing us that way. Also, if you look at equity markets, nothing has reacted. Really, I mean, they're still at levels where we left them on Friday, if not even a bit higher. We see the DAX, as people were mentioning in our room, trading at all-time highs this morning. Yeah, it's early days in this whole thing, and sometimes we know that reactions may be bigger than the initial actions, right?
Yeah, absolutely, and yeah, we have to remember it's the first main trading day of the year, and there's it can be a bit of a funky time, just as it can be as we close off the year. So you've got to give it a few days to let things settle down, see what markets want to do, see where the flows are going to go. As our mate DK says, you can't really trust anything, and these few days are going to be testing. But Trump's come out swinging. I think he's got a presser later on today, so we're probably going to hear a lot more on this as well, how things are going, what he's up to next, and yeah, maybe it's something that Risk will pay attention to over the days ahead as that stuff comes out. Right, going to have a quick look at what's coming up this week, because it is jobs week, so we've got a fairly busy one going on. Tomorrow, not today, we get the ISM manufacturing number later on from the US. And then it's the final PMIs from around Europe and elsewhere tomorrow. On Wednesday, we get a bit of retail sales out of Germany, some flash inflation numbers from the Eurozone, ADP, that'll be coming up. And then we get the ISM services number later on Wednesday as well. On Thursday, a few bits and pieces out. Going to keep an eye on this. I don't know how many times are out, probably because I'm just back in. Challenger job cuts. We'll have a look at that, see if it's a big one. Again, just going to be getting back to trading the fundamentals this week. Again, and obviously the big jobs picture as well. US consumer credit data comes in later on in the evening. Then we get some CPI data out of China. Then on Friday, not a huge amount out from Europe. But as I say, then we get both Canadian and US jobs numbers out, the good old NFP. So that'll give us a first test. Obviously, this will be for December's data.
Have we caught up now?
I think we have, because we got two together last time, didn't we?
Yeah. I really lost track on where they are, BLS, in their production of the data. So yeah, it could be
Let's have a
good
look.
if
This one
we're
says,
caught up.
yeah, for December. So
Okay.
yeah, because we had November and we had that funny revision, that
Yeah,
funny October number, didn't we?
yeah.
Early December. So yeah, well, touch wood, we should be up to speed on it. You never know with these clowns. So yeah, we should be back on track with all the data. There's still some stuff that's showing delayed. There's still a bit of catching up to do in some of this data. But as far as the jobs data goes, that'll be it. We're back on track. Whether they've caught up with all the household stuff that was missing in October and whatever, that I'm not sure about, but we'll have to wait and see.
Yeah, maybe there's a big review coming in, what is it, March or so, February, March or so.
Yeah, we get
Because I
the
think there are gaps left, right? That they
yeah.
did not get. But I think that's going to show maybe up in the reviews. And anyway, I mean, markets will trade what's happening right now.
Yeah, it's going to do what it's going to do. So, yeah, a fairly busy week, particularly from the US side, to get things up and running. So we look forward to that. Anything else, Kay, that you've picked up over the holidays or festive?
A bit of a local ping pong between Farage, Starmer, etc. But not that the sterling takes any notice of it. It's actually stronger. But yeah, maybe people think that if Starmer blows up, then it may be good for the sterling. I don't know.
Yeah, yeah. What's this? Just a headline coming up that I think Trump apparently told everybody, the powers that be around the world, that he was going to do this action on December 30th. So he told everyone, so they kept all that under their hat. Anyway, we'll hear more from him later on. Right, let's have a look at what's been going on. As I say, bit of a funny time of the year. So you can't really take too much out of the moves so far. We seem to have a bit of reversal going on in dollar yen after the bounce. This 157 level is really a key level. It's always had a say in things when we've been up and around here, going back the last couple of years. Here we are again. When we've had decent moves above, we've gone up to the high 157s. Can't quite hit the 158s. We've done that twice. We've had this little overnight morning move above 157. It hasn't held. We've come back below. So this is really going to be a decisive level. If we start to get above and build on this, find some decent support, more so than we've found in any of these types of moves, then that's potentially going to be the signal that we're going to push higher. While we're below it, it just keeps us all in this malaise that we've seen around here. So a move down to 156, 50, 55 is possible. That's probably your main area of support at the moment, or closest area of support. Got a bit of moving average confluence coming in there as well on the hourly and the 4 hourly as well. So keep an eye on that. Kay, do you think this is going to get back to its old weakening ways? Now we're probably over the BOJ hump, shall we say?
I would assume so, but again, we may have this early years move and perhaps some money coming back in the system, which is seemingly helping the yen a little bit right now on the cross side. But yeah, I don't see for the time being anyway. Wouldn't it be that all of a sudden yen picks up on negative risk, that it's going to be a lasting move? So yeah, we may see a little bit further sideways action or corrective action, but it's going to be important to see what's happening in those 155s, and then again, I think the major one is going to be around 154.5 if we get down there, but that's 200 pips away.
Yeah, absolutely. And it seems well off the mark with that comment about Trump just now. It was to do with something else, not the Venezuela stuff. I just saw the one line flash across. Anyway, right, so that's that from dollar yen. Euro sterling, that's looking like I might take my first loss of the new year. Never like doing that. It's in my first trade, but that looks like it's heading for the bin. I took a little long 87.03 this morning. Just a little try against the figure. That might be going in the bin first thing. I'm not sure why this one is strengthening so much. Well, I am. We've seen a turn in the pound pretty much after the post-budget highs. I'm still happy to remain on the long side, but where this one is going to drift to is anyone's guess. We guess we're going to have to match off the data between the UK and Europe. Long term, I still feel that there's problems coming for the UK, but how long they take to show up, again, is another question. So we've broken below 87, 86.90, which is a bit of an area. Now we could be heading for this zone down here, this 86, 45, 70 zone, bit of a wide one, but we've had plenty of action in there previously and prior to that as well. Got the 38.2 of the move up, the year's move up, or last year's move up, 86.20. That comes in against another decent area, 86, 85, 90, just amongst all this lot here and prior highs back here as well. So it's going to be a bit of an area if we get down there. Kay, you got any thoughts about why the quid's in favour all of a sudden?
It's as you say. It started. We had this move on the budget, and then from after the budget, it already started to just be sluggish and not being able to continue to rally. And then into year end, there was something relatively interesting, I would say. We had two blips higher in euro sterling, and they were immediately sold into. And yeah, I actually let mine go last week, which was above 87 still. I don't know exactly the reason why we are here for sterling as such, but yeah, it's I don't know. It's something that's just occurred towards the year end. Just that sluggish. I think the market was just quite short sterling and not finding any reasons to continue to hammer it. And here we are. I mean, we can hardly say it's on the back of the data because the data have been sluggish and just head above water. But they were let's say for the euro sterling in particular, they were maybe a little better than the European data on balance. But we're really talking about very minor differences between Europe and the UK. But was that enough for the people to just let their short sterling or buy their short sterling back? And we are seeing the effect of nobody maybe yet wanting to pick up the baton and sell sterling. I actually thought that the market would sell sterling at the start of the year, but it's not happening. So be patient.
Yeah. As much as I'm still bearish on the UK, as I said in the latter part of December, I can see maybe a bit of a pickup in the economic data coming into the new year. There might be a case, particularly for the consumer, of saying, fuck it, things are going to be shit next year. Let's have a blowout at Christmas. So I wouldn't be surprised if we see a bit of better data, maybe for December, January, and then we'll see what happens after that. So it is possible we might see the pound on the front foot for a bit longer, and then maybe reality bites later on. But I'm not going to get married to my own position. If the data continues to improve, then I'll become less bearish on the UK. But yeah, as far as trading it goes, I'm still long from down in the low 86s, and I might just think about tightening my stops up a bit if we get through this zone here, rather than get caught out all the way down, and see what happens down there.
You know what the issue is as well? Is you're still at higher interest rates in the UK, so people sticking longer term with euro sterling longs, funding maybe biting a little bit,
Yeah, exactly that. Right, mate, I'm going to punch it over to you nice and early. We'll have a nice early show today.
Yeah.
If I can remember what I need to press. There we go. And that one.
Okay. And I'm actually going to stick with the sterling because we have seen, indeed in cable as well, we have seen those dips that we had into let's say actually over the course of December, all those dips we had were always always met with buying interest, and also into the end of the year, we saw a bit of the similar kind of thing. But even though we're still in a kind of upward channel, this one has the steeper one has been broken, but we're hanging around there. But we're hanging in this 134, 50, 70 zone. We're not making too much headway, but we're hanging at relatively um, good levels for the sterling then compared to the dollar of from over time, from what we have seen in November. So any dollar weakness creeping in, if we would see some, if the market wakes up and says like, well, actually, what Trump did wasn't really great for the dollar, could see it back up to 135, 25, 30. Why not? This is just looking like it may want to perhaps push a little bit, especially as well, since it's helped by that euro sterling, right? If you look at the rest, euro dollar came down a bit, continued its slide. That's the post fixing for the fixing on Friday. People in the market will remember that we had a little bit of a blip higher, which we counter traded in our some of us in our room. Did a pretty good job of it. We came lower. I covered mine. I actually trying to catch a little knife here. But yeah, I mean, we had this bit of follow through, but right now we're seeing some small weakness coming through in the dollar. So we may be in for a little bit of a bounce, but we could be actually trading a bit of a range here between 116.70, 117.05. If we get outside of that, that we may be doing another 20, 30 pips, but I think we have to wait for the states to come in to tell us what they really want to do with their own currency. And obviously, we have to watch what the headlines are telling us as well, right? This is an ongoing situation, and we never know what reactions may be or come later in the afternoon, or the headlines that may drop from people who had also interests in Venezuela, as we mentioned. One that's still holding okay. Um, we haven't seen the risk of that we could have perhaps expected on the back of the events in Venezuela. So we had a little bit of a move lower, but this 66.60 seems to be a level where the market is having interest in the Aussie dollar. So we're back into this zone here, bit of a neutral. But if you overlay it with the cable, it's relatively a similar kind of picture. Um, where the Aussie is holding at relatively positive levels for the currency versus the dollar. So again, here it's a bit similar as in the cable. If ever the dollar would turn around a bit and weaken slightly from here, watch what's going on in the 67, 25, 30 zone, because that could be a bit of a trampoline for a move back higher. But that is for as long as 66.60 holds. If it doesn't hold, them, of course, if the dollar catches more of a bit, then we are going to see levels closer to 66 and a quarter and 66 the figure. And then just to close the debates for today, the metals, and then gold especially, from around the open, what I expected really. We opened at around here-ish, 43, 50, 51. I had a bit of a move just under 50, but managed to catch some of this, and now we are moving higher. So this to me is still one that should, in theory, unless that there is something really positive happening on the geopolitical front, should remain bid. So the next level here is 40, 45, 44, 40, 45. If we get through it, then we may see a move and fold up into the 45 zone. We have a bit of a, as Blake already said on our updates for the people in our room, bit of an inverted head and shoulder as well going on, but it's rather sparked by the geopolitical events, and I think there is going to be more stress remaining right now until we really know what maybe China, Russia are willing to do or trying to do to counter, because they have like a lot of interest in Venezuela. And last one, the silver, from the last week of December, hitting that new fresh support zone here, 69.30 up to 70.80. One, so first of all, was a springboard to go up to the all-time highs. Retested, bounced, retested, bounced, retested, bounced. Nearly came there on Friday, and we bounced again this morning. So this is really your major support zone on silver right now for the shorter term. More medium term, we're looking at bigger zones here into 65.60. 65 and 60. But for the shorter term, this is already a very decent zone that we look at. And then you look at where the bouncer stopped last was around 78. And then I would really say the 61.8 of that first retracement here, coming in at 78.75. If that goes, then we're probably in for a move back up to the all-time highs. But again, here also, one step at a time, watch those headlines. We could be in for more yo-yo on this silver, but that zone here is shaping up as the short-term support area for sure on silver. And to start our new year of flow shows, that's enough for today. I think back over to you, Ryan.
Thank you very much, mate. Yeah, nice, easy one to kick us off for the new year. Thank you, everybody, for coming to the Flow Show. Stay tuned for the rest of the week. We'll keep you updated on what's going on, and have a great week, everybody. And we'll catch you all tomorrow. Thank you very much.